is here. We talked about the fundamentals. Let's talk about the technicals. You think the bull market is dead?
That's the definitive question right now, whether, in fact, this 5-year run is showing signs of being at an end.
And you say yes.
You know, the construction of the market's an important concept, right? And if you, not in terms of new highs or new lows or value growth, but the parts of the market, the strongest end, the Googles, Apples, RIMs, have now broken. That's an important concept. Then mature tech, Cisco, EMC, Oracle, all showing wear and tear. Just as the financials get weaker, consumer gets weaker, so it continues to deteriorate. Transports, which we've talked about over and over, and now even the shipping stocks, which are so strong, starting to show. China, starting to show. Every part is starting to show its age.
You started to bite your lip when he talked about the breakdown, and why are you biting your lip?
I did, and here's why. Because I think what we are really seeing, what we saw today with Google, Apple, Research in Motion, and all those names that I love so much, what I really think is happening, and I don't totally disagree with what he's saying, but I really think it's a rotation. The pain that people are feeling in Citi, in Merrill, in all these names that are getting crushed, that's what's taking that money out of some of those other names that actually still have growth. I don't think those stocks are broken. But I think the problem is the broken stocks like Citi and everything else is dragging people down and out.
Isn't that the whole bear point, though? Isn't that the ultimate outcome?
If you think that those big financials are still going to get crushed, yes. But I think we're starting to get to the end, but I don't think we're there yet in Citi and Merrill.
That's the bifurcation issue, right? Very, very strong and very, very weak. And yet, how does it get resolved? The strong ones are now succumbing, and the weak ones are staying weak. And let's say it never goes lower, as of today.
Citi's floor is 31.
Let's just say that's it. Does that make it a buy? No, it's likely to be dead money at best, meaning it's just going to do nothing. And, as referred to in the show, what's going forward in terms of their business lines? Forget about the income and the loss of income and then the balance sheet problem. It's just not a good story. So it's dead money. Let's say it never goes lower. Let's say this is the absolute low, per chance. Does that make it a great rebound? I don't think so.
Would you say that applies to the totality of the financials?
I think the financials in general and big consumer discretionary names. So all that part of the market that's had trouble is not likely to quickly get better. And now the leaders are starting to succumb. Right? That's the.
You were going to say, I was just going to ask. I mean, is this a U.S. call? Is this a global call? And at what point? You know, because we talk about the fundamentals and where they're going to break down. So far, they haven't really.
They haven't broken down. The GDP numbers are strong.
Yeah.
You know, there's a lot of definitions for what is a bull or bear. In fact, one of them that's out there, it's been there for 10% is a correction, 20% is a bear market. I've never seen who wrote that. I have no idea. That's preposterous. Someone just made it up, and we all just said, okay, that's ridiculous. There is a definition, as I know it. It's you know, from the 20s and 30s. It's where you are in relation to where you've been and the smoothing mechanism. The 150-day moving average in the S&P is at risk of turning down. It's turned down in the transports, it's turned down in the Russell, and we're on the cusp. If the market doesn't immediately get better, by inference, we're starting to show the signs of a topping out. That's the position I'm in, you know.
But if there's not money, if, for instance, the bottom is in for Citi, for Merrill, for Goldman Sachs, and all the rest of them, if the bottom is finally here, the money that's sitting on the sidelines is going to go somewhere. If it doesn't go in the financials, that's when I think they go back into the growth stocks, like Apple, like Research in Motion, like Google, some of those other names, the high flyers. But those stocks that have shown the growth and they have projections, their outlook is strong. But I really honestly think it's that rotation from the pain. But if the pain is over, the money on the sidelines is going to go back into those stocks.
It's not a bet I'd make. First of all, I wouldn't bet that the financials are over. We're using that as a hypothesis here. Right? I don't think that's the case. I think there's more to go on there. But breaks in trend are important. And these steep trends in major leaders, these high-flying tech, have all had a break in all on the same day. China, RIM, Apple, Google, all on the same day, all in heavy volume. It smacks of a change in sentiment that the valuations are worrisome to people.
What are you thinking right now, Karen? I see you taking this all in.
I am, and you know, I look at stocks, I think, in a very different way. I look at them as a discounted cash flow stream, and at the end of the day, or really it comes to at the end of the quarter, do they meet their numbers or beat their numbers or not? I don't know what the market's going to do today, tomorrow, but I just know if I'm right on the earnings story, then ultimately the value will out.
Sure, I mean, the individual stock, that will always work, obviously. The issue now is equity doesn't ask.
That's why you do it.
Yeah, that's
Excuse me?
If it'll always work, maybe that's why you do it.
It doesn't always work.
Fair enough.
Here, just one other thing, just about the financials. You know that first call consensus right now for S&P 500 financials, the whole shooting match, from American Express to MetLife to Berkshire to Goldman, all of them as a group, the call right now by analysts worldwide is that financial earnings will rise 13% in 08. That's borderline preposterous. How? They're just getting worse now. And yet the consensus is 13% earnings growth for SP Financial.
Do you think people have lost their mind?
Well,
13% financials
you
growth?
make a good
Are you got to be
point.
a fruit cake to think that at this point?
If the analysts
In
take
your
their
face.
numbers down, it doesn't mean the stocks then necessarily have to go down.
Right,
all
but
with
there's
it.
no life for a bounce. I think that's...
But you know what I'm saying?
Sure,
Yeah.
absolutely.
You're saying the stocks may,
The analysts-
may not
the
may
analysts-
be ahead of the analysts on this
Yeah,
one.
but the stocks are already at
Do you think financials are dead? Dead.
I'm not
For a
sure.
year.
I mean, I think there's probably a lot more information we don't know, but I'm with Karen in that I think you have to blend the fundamentals. Obviously, the technicals tell this part of a story, but they don't tell the whole story. And I see earnings growth in emerging markets at 15 to 20%. They could be revised down, by the way. So far, things look very strong. And that kind of momentum, a technical move, actually still seems very positive there.
Real quick, on a specific name, you talked about a short of GM a while back. Your thoughts on any of the specific names coming out
Let's
of the...
stay with that. Despite how painful it was over the last month and a half, it's a big move. And it's always this way. Look, I was on the show said buy Cisco. We saw what happened to Cisco. Just get out. There's nothing wrong with that. You can't just marry an idea. That's a bad game.
So the technical on Cisco here tells you get out still,
Absolutely.
even after
When
today's
there's
move.
shocking disequilibrium, right? When it's orderly markets, and then all of a sudden,
I think that's
bad
important.
thing like
People
that.
see a move down like that today and say, hey, maybe things are okay.
I would not buy that dip. That's treacherous. Think if you bought Citibank 5 sessions ago. Think if you bought, well, pick your name. Think if you bought Croc.
Now, he's going to lose it now because you just compared Cisco with trading. I mean, and he's a big man. You're going to...
I'm going to stand up here.
They're going to...
There's a lot of write-offs that these other guys have that you're not seeing with somebody like Cisco. Cisco's earnings were fantastic. They're making money. I mean, that's not the issue.
Yeah.
The issue is how much are they going to make in the next quarter, the next year, and they didn't live up to the expectations. That's the only problem. It's not broken at Cisco.
All right.
Well,
You
that's
get
what
the
makes
last
a debate.
word.
That's what makes a debate. You know, you got to pick your sides so you know where I come out.
All right. A pleasure. Carter,
Thank you.
thank you very much. We'll see you sooner than later. Carter Worth, Chief Market Technician, Oppenheimer.